Kev. I love you, Kevin. But what are you doing? What are you doing?
Hey everyone, it's Mike Andes, and you're listening to the Business Bootcamp Podcast. A big thank you to today's sponsor, which is Gusto. If you haven't already, go to gusto.com/bootcamp. If you do any sort of payroll and you want to get away from writing out checks on every Friday, definitely want to check out Gusto because you can have an online mobile app for your employees to clock in and out of and then write checks to them virtually, ACH, directly into their bank account. All automated. So check it out today. Go to gusto.com/bootcamp and try it out for free for 90 days.
So I'm going to break this down really quickly, and I want to first state that when it comes to Kevin Pathrath, or also known as Meet Kevin on YouTube, I love the guy. I want to be very, very clear about this. This is not some sort of like gotcha or expose, because I'm actually, I learned a lot from Kevin. I've been a member of his courses for real estate and stocks. I watched a lot of his videos, and he has helped me dramatically over the past couple years in the amount of content and the amount of knowledge he has shared. So let that be very clear. But I do believe that something's behind the scenes that is not being talked about, and that is why Kevin is actually selling out. So if you haven't heard, about a week and a half ago, Kevin sold all of his stocks. So on January 21st, Kevin pulled all of his money out of the stock market. Now, this made a lot of people mad because just a couple days earlier, he was literally posting inside of his Stocks and Psychology of Money group, they're like, buy the dip, stay strong. This is why, don't be paper hands. This is what tries the people that always sell at the bottom and buy at the top. This is stay tried and true. And then all of a sudden, out of nowhere, the 21st, he sells everything. And like inside of his group, people were like freaking out. Like literally, you said a couple days ago to buy, and now you're saying to sell. Let me be clear. I'm actually not against the thought process of being adaptable and realizing that there's different trains of thought when it comes to investing that have to be molded, and that you can't just be like, this is the way to do it, and be stuck in your trench of thought and be like, oh, we're just going to the moon and diamond hands everything. I understand that. I agree with that. And I've sold out of companies like Alibaba when I realized it was going the wrong direction. I sold out and I lost a lot of money. So I realized that you've got to have a flexible mindset when it comes to investing. However, I want to show behind the scenes because as a part of his, being part of a member of his courses, I also know some other things. Two things. Number one is that he's starting businesses this year that require a bunch of money. And I know for a fact that he needs to protect that money, that working capital, if he's going to start these businesses. And I don't know exactly what they are because he hasn't released them yet, but I know there's going to be funds involved, like where people can actively trade money with Kevin, as well as there's going to be a lot of development in terms of technology because he's hiring tech developers. Now, I know firsthand from developing P4Psoftware.com that developers are very expensive. And so I know that he is putting a lot of money in these new business ventures, and he's going to have multiple funds and ways to invest with him over the next several months. Now, that's the first thing, is he has a whole bunch of businesses he's going to be starting, and he needs capital for those. He can't afford to go from 20 million to 10 million. He can't afford to do that. And so prior to January 21st, he had over $30 million in stocks. Well, it had gone down to 20, and I know for a fact that he was pulling the money out just because he knew if he lost too much more, he was going to be in trouble because he would not have the capital required to start these businesses. The second thing is that he hasn't really talked a whole lot on his public channel, but on the private channel he's talked about, and that is the fact that he was going to buy a private jet for $20 million. That was a massive bullet that he dodged. If he would have paid $20 million for a jet, and what would just happen with the stock market and tech stocks crashed as much as it did, he'd be in a really, really, really bad place right now. So all of that to say, is there's businesses that he's trying to create. He needs the working capital. He needs to protect that because he's already made obligations in terms of developers and hiring people and staffing up and starting to get ready for this fund. And I think that's going to be a matter of investing with him in real estate as well as stock market, and then finding deals, kind of a syndicator, but for like residential single family homes. I think that's what it's going to be. I'm just guessing. I'm just presuming, but those businesses will need capital, and he's saving money for that. And he didn't want to go into that nest egg if the stock market continued to fall. Now, what's happened since January the 21st? Because guess what? January 24th, 25th, 26th, he seemed like he was a genius because the market kept tanking. Literally Monday morning, January 24th, the stock market just tanked. Like massively. He saved like at least $2 to $3 million just by avoiding Monday. But as it always has been said, time in the market beats timing the market. And if Kevin would have just stayed in, kept all his stocks in, he'd be up more than $2 to $3 million on his portfolio. Because over the past week, we've now had 3 green days in a lot of these growth stocks that he was heavily invested in. If you look at the NASDAQ, if you look at ARK, which is the type of style of investing that he's really in, high growth and very much future-based, high growth potential type businesses, they've done very, very well the past week, and we've seen a bounce. Now, is this going to continue? I don't believe so. I actually do believe that Kevin is right in his thesis that over the next 3 to 6 months, we're going to have a pretty choppy stock market. It's going to be up and down, and potentially you could trade in and out. Now, again, Kevin went right back into the market. Just a few days later, he went back into the market 33%. So again, he's trying to time the market, but he literally missed the dip. Like everyone says, well, I'll buy back in when it's lower. Well, the dip came, he bought back in at the height, and it went back down. Like timing the market is not a good strategy. And I really, really admire Kevin for sharing this publicly and being this open and honest about his trades. But I also do believe that he's trying to protect his money, as he should, for the future businesses that he's trying to build and the staff that he's onboarded for the development of these different apps and technologies he's trying to make. And I also do believe that for the average investor, they should not be following in his footsteps. Because if the Fed comes out this next week and says, oh, we're actually not going to raise rates in March, we're going to raise them in June, literally immediately, all of these stocks that he has just sold are going to be up 10 to 15% immediately, and he will have lost millions of dollars. So timing the market for the vast majority of people is not something you should be doing. And if you're going to buy a stock, think of it like this is like, I'm in this thing for at least 5-10 years, and realize that you need to be flexible, that there might be data that comes and you're like, oh, I've got to sell this stock. But if you're not going to pay another manager, a fund manager, to manage your stocks, just buy and realize that money is like, I'm with this company for 5 or 10 years. I believe in the long term of them. And unless I get data to prove me wrong, I'm going to stick with them. And you could say, this is what Kevin would say, is he did get data that would prove him wrong in the thesis of diamond handing and holding things forever. But it's extremely risky to think that you're going to be able to time the market and buy the bottom. And so this is a word of caution, as well as some of the behind the scenes that I actually think is happening. And I think in the next month, we're going to hear what Kevin's really been up to and why he pulled all that money out to preserve the nest egg required to build these businesses that will probably 10x what he would otherwise have. He's losing in the market right now. So I don't think Kevin's going to zero. I don't think he's going to go broke. He's being smart about, hey, I got to protect my nest egg. But for the average investor, for the person that's trying to be more passive with their investing, trying to time the market is a bad strategy. In my opinion, save up cash for these massive dips that we've seen, and that's when you can buy more. When it goes down, you buy more. The same way if you went to a store and something was off 50% off, would you be like, oh, no, I'm going to just wait till next week. Maybe it'll go down to 60%. No, you'd buy more. And if it went down to 80%, guess what? You'd buy more because you like the product. You see the value of that product. And if you believe in a company, believe in the future of that business, believe in what it's going to become worth one day, you will buy when it goes down. You will not sell. You will not paper hand things. And I really look forward to seeing what Kevin has in terms of his businesses, his funds, and what he's going to be offering for the public over the next few months. I'm looking forward to it. I'm super happy that he did not buy a private jet and he was going to spend $20 million on a private jet. And fortunately, that did not go through because they were not going to be able to get it done by the end of December for his taxes. So I'm looking forward to seeing what's coming down the pike. And just a note to most 99.9% of investors out there that are private and you're actively trading your own stocks, you should not be selling when things are going down like he did. You should just stay in the market as long as you believe in those companies long term.